Welcome back to Talking Markets. My name is Trevor. I'm here joined with Brian. Brian, it's been a while since we've had our last chat. How's it going?
Great seeing you, Trevor. Yeah, it's been great. It's
Yeah.
been a little bit here, and we're back in the swing of things. Looking at,
Yeah.
it's funny. Even a couple months later, the markets haven't changed a ton since we had one of these
No.
calls. The prices, at least, but the conditions
Right.
and news stories, we've got plenty of fresh ones here.
Definitely. Definitely. So, in the past 7 days, Bitcoin, it went above $27,000 and it was kind of, it looked like it was just climbing and climbing. And then next thing you know, as of yesterday, the price fell back down to $26,000. So why was this? Well, during yesterday's FOMC meeting, it looks like Powell has actually kind of hinted that there could be a rate hike in the future. So it looks like the next meeting for the FOMC is going to be in 41 days, so on November 1st. And with that, it looks like there is a slight probability that they are going to increase interest rates then. So this was, it really looked like, it was quite bullish because people weren't expecting a rate hike during this meeting. And while that was true, what people weren't expecting is what Powell was going to say about the future. And it looks like he said that, they're probably going to increase interest rate hikes moving forward. So this is just something to be seen. And yeah, so that one's going to be in 41 days from now. So there could be a lot of volatility then. And it's just something to mark onto your calendar. Speaking of calendars, here is the updated list of all of the spot Bitcoin ETFs and kind of like their current deadlines and just what they've been going through. So it looks like Kathy Wood's ARK Invest is actually past her second deadline, and this hasn't been passed by the SEC. So it looks like they're kind of just kicking the can, down the road, if you will. And their third deadline is going to be on November 11th. And then there's actually a lot that have their second deadline. So for example, iShares, Bitwise, right? So a lot of these are going to have their second deadline in October. So it looks like mid-October, October 17th to October 19th. These are going to be big days for these to possibly get passed. And then, with that, of course, there's just a really high chance that it's going to, the SEC is just going to continue to kick the can down the road, and that they could make it up until the final deadline, which is going to be the January 10th for ARK, and then it's going to be March 15th to March 19th. Those are going to be some key dates for the rest that are going to follow. So that's just something else to mark onto your calendars. And then this is just something I also just wanted to mention today is that Rolling Stone actually came out with an article today saying your NFTs are actually finally totally worthless. So I thought this was pretty interesting that they created an article stating this. So it's just something weird to see Rolling Stone actually talking about crypto. Um, and then the other thing is too is that when it comes to the interest rate hikes and all of this, this is only around the 5.25 to 5.5% range. But when we're kind of zooming out and looking at another country, Turkey's central bank hikes interest rate to 30%. So this was today, coming up from 25% right now to 30%. So this was big news. And it's pretty crazy with the lira too. The Turkish lira is down 30% against the dollar year to date and has lost 78% of its value against the dollar in the last 5 years. So zooming out and seeing this is just absolutely crazy. And maybe even flipping this on its head, maybe Turkey is a great investment opportunity at this point. Who knows? I think possibly getting some land in Antalya, Turkey seems pretty cool. But that's just me. So, anyways, Brian, what do you have?
Okay, so yeah, on my end, I've been seeing a lot of keywords related to the FOMC decision from yesterday. Makes sense, obviously. Crypto has had its eyes on what the Fed has decided to do with interest rates every month or two that another FOMC meeting has occurred, pretty much since the beginning of 2022 when it started to really shake up the crypto sector and mostly push the prices down. Um, but yesterday was a pretty non-event for crypto, and this was a little surprising because yes, interest rates didn't move, but it's still the hawkish stance that Jerome Powell and the Fed uh, had in terms of their discussion about interest rates in the rest of the year and going into 2024. It did push the S&P 500 down quite a bit, and we posted about it just yesterday on our Twitter. Check this out. So the S&P 500 fell to its lowest level in just about a month, about 4 weeks or so, while Bitcoin is still staying up here. As of right now, it's fallen back below 27K, but um, it's held up quite well since the decision. While the S&P has continued to fall, it's down another 1.2% or so as of the time of this recording for the day. So the reason this is significant is because we've seen a long track record for about a year and a half now of Bitcoin and the S&P 500 being very correlated outside of obviously the FTX collapse where there was this big divergence, but it kind of snapped back in. And now we're seeing less and less correlation with each one of these FOMC decisions, particularly since the start of the summer, where the S&P will zig and crypto will zag. I think it's quite notable right now that Bitcoin has stayed afloat with the FOMC meeting going on, indicating that there's a little less sensitivity to what's going on in the real world right now. And the less correlation the crypto sector has to the S&P 500 and equities in general, generally the more likely that crypto can begin to break out and have its own legs. Most, if not all, of the bull runs that we have seen uh, since the existence of crypto about 15 years ago, they have they have happened with very little or no reliance to the S&P, not opposite reliance. Some people think that crypto goes the opposite direction. That's not true. There's just no reliance and no correlation whatsoever. Um, so I think that's great to see that that crypto has held up so well. Looking at just the 30-day returns here, we can see that not much has changed. Bitcoin being up 2.1% or so is uh, fine and nice to see that it's holding up well, better than most assets, believe it or not. Um, this is kind of why a lot of people like holding Bitcoin as a risk tolerance uh, mechanism, because yes, it's still way more volatile than holding Google or Amazon or something that has very little volatility relative to crypto. But when it comes to bear runs, which we've kind of been in for about I don't know, close to 2 years now, since November of 2021 when the all-time high hit, um, altcoins have really gotten smashed. They've really fallen quite a bit. There are a few exceptions. Obviously, we see Toncoin recently going on a great surge, but uh, not many of us predicted that, right? That's the whole problem with holding altcoins is it's very difficult to predict which ones are going to go on pumps. But Bitcoin being up over the past 30 days is nice to see. Ethereum being down 4.5%. Avalanche down 12%. Hedera has really retraced a lot after a decent summer. Um, Most assets here, if we went past the top 100, they'd be in the red. So, uh, moral of the story is we're continuing to see an overall flush in the crypto market cap sector, uh, even though Bitcoin is innocently kind of sitting around the 26 to 27.5K level here. Um, so in short, just make sure you are tolerating your risk, because this trend could continue through the end of the year and into 2024, even with 6 months to go now until the halving happens, which is a highly anticipated event, and most consider it to be bullish because it uh, makes the difficulty of mining twice as hard, making each precious Bitcoin and the supply that much more valuable. So that's the update on the overall crypto price return and social trend. And when we look at the percentage of stable coins that are being held by whales with over $5 million, this is pretty telling. The buying power has really started to sink since it topped out on June 10th. So a little over 3 months later, we saw the percentage of stable coins held at about 54.5%. Now it's at 51.1%. So a 3.4% drop in the overall supply of stable coins is pretty large. Obviously, it's still up significantly from where it was at the beginning of the year, but we'd like to see this start to reverse and show that whales are accumulating more and more buying power over time, not less and less. So you can see the obvious correlation here. I really love this chart, and it's a pretty recent addition. I don't know if we even had it the last time we spoke, Trevor, but it's one of my go-tos now when I want to look at where bullish and bearish divergences are. It looks like it's pretty spot on now if you eyeball it, but this, for example, when you saw that the price was moving down here from May to mid-June, but the percentage of stable coins held by $5 million plus whales was going up, that's a nice sign that there could be a little bit of a bump. And this bump, of course, was related to the ETF announcements, but nevertheless, I think this can be a great sort of leading indicator when you're panicking, seeing that prices are moving down, but stable coins are being accumulated. That might be a sign that buying the dip isn't too bad of an idea. The last thing I wanted to show, so this is still being worked on by our devs, but it's kind of our new kid on the block, and I really love it. It shows the top trending tokens in crypto, essentially which ones are being talked about at the highest frequency relative to their normal frequency. So not just overall, otherwise we'd see Bitcoin, Ethereum, XRP, Chainlink, all the usual suspects at the top. But IMX, Elon, there's Bitcoin. But you're going to see a lot of obscure tokens that you don't normally hear about suddenly jump up to this top trending token list because there's some news that's making them popular amongst the crypto community on Twitter, Discord, Reddit, Telegram, and even 4chan. And if you scroll down, you can see the context. So for example, IMX, this is going to be a regular occurrence for why tokens are on the top 10. It's trending due to a significant price increase of 30%, growing market activity, increase in open interest. So that makes sense. I know that Elon is kind of it's trending for very bizarre reasons. I think there could be some bot accounts going on. So not the best example. Sometimes you'll just see that tons of Twitter accounts are suddenly talking about it for very strange reasons. Like if you look at the AI summary, which by the way is really awesome. It gives an explanation as to what the conversations are about revolving that asset. It's kind of just nonsense. Robust cyborg, Karl Marx, Monero. I mean, extra privacy features and potential use as a decentralized stablecoin. That's significant. So there's some new discoveries and analysis on why Monero is a valuable part of the crypto ecosystem. So that to me looks like a bullish perception related to the popular privacy coin. You get the idea, but I recommend you guys really explore this, including you, Trevor. I know you got an account and we can talk about it offline a little bit more, but yeah, right now it looks like there's a lot of interesting assets that are sitting on top. Bitcoin, of course, being one of them, due to having a big market dominance right now. It doesn't say here, but obviously people are talking about the halving as well. Lots of cool features. So I just wanted to bring that up. And you can even see positive, neutral, and negative sentiment, which is still being worked on, by the way. We're trying to perfect this. I wouldn't rely on it too much just yet. But our algorithm is being modified to make this much more accurate going forward, and we'll have some updates in the near future.
It's definitely awesome to see that you guys are still, building your product, right? Even in this bear market, you guys are coming out with new features and stuff like that. It's really cool. That chart that you showed me, that's new from last time. I don't remember,
This one?
Yeah.
Mm-hmm.
Yep.
Yeah, totally.
Yeah.
The percentage of stablecoins held by large whales, $5 million is kind of an arbitrary amount, but to us, that's kind of the beginning of those really significant whales that can move the market. So, yeah, we'll touch on this more on a regular basis, but I think it's a really cool way to kind of look at the overall activity of how much buying power they have without having to break it down by like Tether, USDC, all those multiple lines that I was showing you on previous calls. Like this simplifies it.
Yeah. Yeah. All right. Well, let's call next Thursday, make another video, talk about all the latest things to talk about in the market then.
Yes,
Sounds good?
sir. Yeah, let's make this. We'll get back into the regular swing of things, folks. And I'm excited to have
Yes,
Trevor back, and looking forward to some more great calls as we end the year strong. Hopefully, fingers crossed.
definitely. All righty. See you, everyone.
Take care, guys. Thanks, Trevor.